Hi everyone, hope you're all doing well, and today I'm going to share with you the three stocks that I bought this week, or the week just kind of gone. Yeah, we'll go through these three companies I bought. I'll kind of break down a few reasons why I bought these companies. There won't be so in-depth videos. I've pretty much got a full video, I think, on most of these companies, apart from this one actually, which I probably should do a full video on at some point, but I do really like this company that's number one, which is a UK company. We've got a UK company, a US company, and a Chinese company, so we've got a nice mix on today's video. But yeah, going forward next week, there's some earnings on smaller market cap companies, which means that if these earnings are good, we could see them go up quite a bit, and the same as if they're bad, we could see these companies come down a bit. So there could be some buying opportunities created next week, so I'm going to keep an eye open for them. As well as that, there's also some other companies that I'm watching very close. There was some companies that had a little bit of a dip last week, and I'm really considering. There's probably two companies at the moment that I currently don't own that I'm really considering, so I might buy them. We'll see what happens on Monday. But yeah, some interesting stuff going on in the stock market. So yeah, we'll go through these three companies that I bought anyway. If you could smash the like button. If you do want to know when I'm buying and selling these companies, then join my Patreon. But on there, I always post when I'm buying and selling companies. There's some portfolio reviews on there. There's some exclusive live streams on there. There's quite a lot of content on there. There's a Discord on there. There's a lot of information on there for £5. I think it's really good for what you pay and the value you get from it. I think it's pretty good. And yeah, if you want to join, the link's in the description. And if you want to start buying some shares, there's a link to a free trade account. You open an account through the link. You also get a free share as well, which is pretty good. But we'll get stuck onto these three companies that I bought this week. So number one is S4 Capital. It's one of my newer holdings into the UK portfolio, and I really do like this company. I kind of, in my head right now, I'm planning this company is going to do amazing over the next few years. There's going to be a big return from it. And I'm kind of looking at the situation now. I'm thinking S4 Capital could come a top three positions. I expect it to come a top three position in my UK portfolio, and it can potentially come my number one position in the UK portfolio, which kind of sums up how much I really like this company. Right now, it's about my fourth biggest position. Kind of gives you an idea where it exactly is in my portfolio, but it's one that I really do want to start buying quite heavy. Now, the first thing I'm going to just say right here, because I've noticed maybe 3 or 4 messages about S4 Capital. So I've started buying this company probably about 2 months ago, I would guess. I think it has so much potential to go up. But on the stock chart, if you look, it's kind of not done anything for like the last kind of 2 months. Now that is not a bad thing. I've had a few messages that are like, but S4 Capital's not done anything for 2 months. And so what? You know, if you're buying a new company and it's already gone up 100%, like the best thing it can do is just consolidate for a bit. Like stocks should not go up in a straight line. Flatlining for a little bit is a really positive sign, because we don't want it to go up too quick, because we have the elastic band, snaps back and it'll pull back very bad on any sort of bad news. And that's not what we want. A nice little healthy consolidation here is really good for the stock. And the other good thing is it gives you more time to build a position. You can now build your position over a 2, 3, even a few months period. I don't expect, when I start buying a company, I expect it not to really go anywhere for the first 6 months. In fact, I want it to kind of not do anything, because I can buy more. Every month I buy more and more and more. It's great. And even better, if I start buying a company and it goes down, that's even a better situation, because then what I can do is I average down, and my average gets lower and lower. So when the company actually starts doing really well, I make even more profit on that. So when a company goes flat after a great run, it's a positive, and it also means you can build up. If it goes down, that's even better. You get a lower average, you make even more profit when it goes up. So that's the first thing I want to kind of say about that one, because I've noticed a few messages on that, like saying that S4 Capital hasn't done anything for 2 months. It's just gone up 100%. Like, relax, you know. I think we've had a stock market which has gone up 60% since like March. That's a one-off thing, you know. That doesn't normally happen in the stock market, and it's all about patience. You know, maybe too many people have been sucked into too many posts where there's rocket emojis saying it's going to 10x or this stock's going to 10x. It's not normal. Like, the whole game of making money in the stock market is patience, finding great companies and holding them for a very long time, and you'll see the rewards. It's all about long-term investing and having that right mindset. So that's something I just want to say on the front of S4 Capital, is right now what's going on with this company, with it chilling out a little bit, is really good. And also, let's not forget, this company's chilling out after, if you look at the recent earnings that S4 Capital brought out, they were amazing, like 10 out of 10 earnings. So the fact that the stock's flatlining there after them earnings, it probably could have gone up a little bit, but because it's flatlining here, it's amazing. I can build up a really good position in this one. And like you say, this is hopefully where it can come into a big holding in my portfolio. Now, if you don't know, S4 Capital is a marketing company. I think it's about 2 billion right now. And the thing is, this company was only founded really in 2017, so to become a 2 billion company already is really good going. It's got a great management team behind it, and I think it will be a 10 billion plus company in the next few years. Now, Martin Sorrell is the current CEO of this company. He was at the previous company, and you look at what he took them to, I think he'll do something very similar with S4 Capital. Now, one thing to think about is, like I said, S4 Capital brought out some amazing earnings. Now, what we think about with a marketing company is a lot of the companies they probably do the marketing for, one thing they would have really focused on is, in this time that we've had with the CV, is cut the workforce. We don't want to take, hiring any more people. In fact, we probably might have to get rid of a few people with what's going on in the CV situation. But the next thing they cut after that would have been the marketing budget. I think there was a report out the other day that said that in the UK, 50% of marketing budgets have been cut or reduced. Now, think about these numbers that they pulled out in a time where marketing budgets have been cut. You think about probably in the next year, marketing budgets are going to come back. Now, if they pull these numbers out with a lot of marketing budgets, and the marketing budgets do come back in the next 12 months, these numbers are going to be absolutely amazing. Now, as well as that, this company is going very big on acquisitions. They are buying more companies than what I can cover in the next few minutes, but they are buying companies really, really heavy. Now, it might affect profitability in the short term, we'll see. They're normally doing a lot of this with cash and also stock. I think it's normally like a 50-50 split, but the more these companies are acquiring other companies, it's just going to help the revenue, and it's really aggressively expanding. And the more and more companies this is acquiring, it's going to do is help the revenue growth on side of it. And that's why I think realistically this company is going to be a multi-billion company, probably a future FTSE 100 member in the next few years. It's looking really good on this side of it. Now, another crazy thing is the valuation side of it. So I was looking at the revenue growth of 50%, profit not too bad. If they can do them numbers, we'll see. Obviously, like I say, we're more focused on the revenue at the moment on this sort of company. Company's going to be growing at like a 50% revenue growth. It's going to be amazing. We don't get many UK companies that grow as fast as what this is doing. It's growing huge at the moment. Now, actually, when we look at the valuation side of it, I was looking at the numbers and I was like, this is actually such a cheap valuation for the growth. Like a company with the balance sheet could be profitable very soon, but the revenue growth of 50%, we don't normally get that with a lot of UK companies that are this $1 billion company. And I actually started working out the valuation. I was like, okay, so it's like a price to sales ratio of, at the end of this year, it's going to be about a price sales ratio of 4, which is so cheap. Like realistically, the price sales ratio should be like getting more towards the 10. So I was like, that's pretty good. We'll start working out the forward P, and like I say, we'll see exactly if it can do that. But if we go by the forecast, it's about a forward P ratio of about 30, which is so cheap for a 50% revenue growth company in the UK. Like a forward P ratio on this should be at least 60, at least double where it is. So I'm like, the company is like undervalued by like, it should be double where it is. So it's already undervalued, and then you factor in, and then it's going to have the revenue growth, the profit growth. I'm like, this company is so cheap. This is why it could be my number one company, because I'm like, this valuation for the growth you get is just, with a proven track record of management. Sure, you can argue that some of the past things maybe could have been dealt a little bit better, but a management with a track record of proving multi-billion dollar companies at a cheap valuation like this, I'm just like, this is crazy. And then once again, like you say, just go through the balance sheet. It's a company with a very, very solid balance sheet as well. And it just shows you like the balance sheet they have and all the companies they've acquired. I think it's just a beast mode company. And like I say, this company for me is in the category of coming, I want it to be at least a top 3 biggest position, but it could come my number 1 position in the UK front in the next few months. So number 2 is DraftKings. So you know me, I love Gang. It's a position that I've been buying quite heavy. And then I was like, is there another good player in this sort of industry? And I looked and I was like, I really like DraftKings. And this week I topped up my DraftKings position by about 10% and just made it slightly bigger. Now this company is going to probably move on Friday because it is reporting its earnings. And I'm not sure exactly what I want from earnings, because ideally I want DraftKings to maybe go down to the $50 range, maybe even the $45 range. And if I could get it around there, then it could be a company that I make into a big top 5 position in my US portfolio. So I'm kind of thinking, I kind of want the company to come down in valuation and I can buy a lot more of. So that's what I'm hoping for. At the same time, I'm looking at DraftKings and thinking they've kind of had the NFL season for a strong quarter, which they'll be reporting. And realistically, this should be a pretty decent earnings for DraftKings. So I'm kind of thinking, I kind of want to see really good numbers from DraftKings, and hopefully they report really good numbers, but then they go down. That is the ideal situation that I get from DraftKings this week when they report earnings. A good quarter, at the same time, for some reason, the stock still goes down. We'll see what exactly happens, because I'm looking and thinking, when the NFL season is in full flow, which would have been in this quarter, we should see some decent numbers. So I'm very 50-50 on what I want from DraftKings, because I want it to go down that bit cheaper, but it should be a strong quarter, which, yeah, we'll see what exactly happens with this one. I probably won't buy any more of this one this week. Maybe one small top up, but I'm kind of looking to see what earnings bring now. But yeah, I did buy a little bit of DraftKings this week. Now, the only really red flag that I have with DraftKings is its valuation. It is a high valuation. It's probably one of the highest valuations that I have paid up for a company. But over the last kind of few months, one of my biggest targets is to try and not look at the valuation of what it's going to be in the 12 months and if it's overvalued, but what the company's going to do in the next 2 to 5 years, especially at the longer spectrum. And I was looking and I was like, yeah, I'm paying up for probably 18, 24 months worth of growth here, a little bit far ahead, but it reminded me of a situation that I was in maybe 3 years ago in the stock market. And 3 years ago in the stock market, I was looking at companies like Shopify and Amazon, and I think Amazon would have been about 1,000 for a share back then, and I think Shopify was maybe about 200, 300 for a share. And I was looking at the companies and I was like, these companies have a lot of growth priced in. They've got probably 1-2 years growth priced into them companies right there. And I was like, I just can't buy because of the valuation of them, what they are right now. And I knew they were going to be big companies, but I just couldn't get over the current valuations, and I thought I'd wait for a drop. And sure enough, we look back at them companies right now. I think Amazon's, $3,000. I think Shopify's gone up to about $1,000. And I was like, at that time I looked at them companies and I knew they were going to go up in value in the next 3, 4, 5 years. But I just couldn't get over the valuation because of how much growth was already priced in. But the problem is that I noticed that I had to stop looking at that kind of view and start thinking where they're going to be in 3, 4, 5 years. And are these companies going to be massive companies? And Shopify, over 100 billion valuation now. Amazon, over a trillion valuation. And this is very similar to DraftKings. I looked at DraftKings a few months ago, and I think at the time it was like $50 and I could have got it cheaper. And I was like, I really like this company, but valuation, it's just crazy. And it just went up and up, and ARK started buying, and I got to $60, and I was like, I could have bought it for cheaper a few months ago, and I knew it was a great company. And I just got to the point where I was like, I'm looking at DraftKings and like, you can see the growth plan, you can see that the revenue is you can see the demand in this company. And I'm looking and it's like, it's just Shopify all over again. It's a 20 billion company, but 3 years down the line, 4 years, 5 years down the line, this company is going to be a 100 billion company. And I was like, don't start struggling over the last kind of, how much growth's priced in. Start thinking further down the line. And you look at DraftKings and you can see the game plan, and this is easily going to be a 100 billion company down the line. And I was like, I just need to buy it because I'm not having Shopify all over again. And I'm looking, I'm like, you knew that was going to go up in value. And that's why I've started buying DraftKings, and it's the same exactly what's going on right now. So if you guys don't know DraftKings, pretty much the main thing to remember is that at the moment, a lot of fantasy sports, a lot of gambling, a lot of sports books are currently not allowed in the US, which sounds crazy to a lot of us guys in the UK, because obviously we've had online gambling for so many years. But in the US, there's not every state that currently allows it, and over the next few years, more and more will be allowed. And I'm kind of looking and thinking, I've already got gang in this area, but also what is another player in here? What player can I like? The gang basically gives them the platform or other bookies to go on and then do their online platform, but what's an actual player in here? And I looked at DraftKings and I was like, I really like these guys. So the first thing I like is the brand. I think the brand is standout, it's recognizable, and this is being proven as well. Like, the brand is pretty good. And as well as the branding side of it is also how good's the platform. Now, obviously the main space is kind of controlled by two players, which is FanDuel and DraftKings. There's a few other players that are coming up to them, but those are kind of like the two front runners at the moment. Now, as well as the branding side of it, the actual app side of it is really good. The reviews, when you look at the app, is currently the #1 app on this kind of industry, which I really like. So you've got the branding side of it, which I think stand out, and I also think the actual app itself is pretty good to use. Now, some of the recent news that has come out, and these won't be in the earnings that come out on Friday, but some of the recent news which will be then in the next kind of NFL season and also in the Q1, which we'll probably get in 3 months' time, is first of all the NFL Fantasy has moved to Canada. So this was only available in the US. So yeah, I mean, we won't get this until the next NFL season, but the fantasy side of DraftKings is now available in Canada. Also the sportsbook side of it. So I said earlier that currently, not every state allows a lot of it, and more states will allow it, and that will help the revenue side of it. Is the sportsbook is now operating in Virginia, and also the sportsbook is operating in Michigan. Now, everything that's kind of come out from these two is that it is going very, very well, and as well as it going very well, also the news was that the Super Bowl actually did pretty good as well for DraftKings. So yeah, I mean, like I say, we won't get these numbers in the newest earnings report, but it's just an example of, as more and more states allow it, it's just going to increase the revenue side of it for DraftKings. Now, on the growth side of it, like I said, the main thing is we're looking at the revenue growth on this company, and the revenue growth is going to be pretty good. One thing that makes people a little bit nervous, I guess, is kind of like it being unprofitable. But for these sort of companies, like at the early stages, the main thing that investors will focus on is the growth side of it, on the revenue side of it. It will be unprofitable because it's in a very competitive space, and it's going to use a lot of promotions that help it attract customers. And if you can attract them customers, hopefully them customers stay betting with you for pretty much the lifetime. So it's a couple of heavy promotions that they'll put in place. FanDuel is doing something very similar, but it needs to be done to benefit you in the later stages of being a company, and having the customers there on your platform. So I'm fine with the unprofitable side of it. The main thing is just focusing the revenue growth and keeping them customers basically. And the good thing about this company, it does have a very good balance sheet to support that promotion plan and help the revenue growth side of it. So yeah, everything from that point of view is pretty good with this company. And number 3 is Ehang. So I've talked about this company a lot on the channel this week. I think I made nearly an hour video on it, so I won't spend too much time on it. I also didn't realise, or maybe kind of forgot, that how many people don't like Chinese companies, and also especially how many people don't like Ehang as well. Like the amount of comments that I got on the channel which weren't very nice to Ehang wasn't great, and also the amount of people that were like saying like Ehang paid me to promote the stock. I was like, I don't think so. I've never taken paid promotion to promote a stock. It's just something I won't do. And also, if I wanted to, I've had plenty of previous good offers. I think one offer was like what I earn on YouTube for 5 months. And yeah, I just wouldn't do it. Like the what you have to do of like only say nice things about a company. You can't say the negative side of it. You pretty much get a script. I was like, no, we're transparent on this channel. I'll say positives and I'll say negatives about stocks. And so yeah, it's just something that ain't never going to happen on this channel. But Ehang, obviously this is a spec play. This is a company that's never going to make up a big chunk of my portfolio, but I really like what the company is producing at the moment. Even whatever went on in that short report, you can't deny Ehang have a proven prototype that works, that people have used with so many test flights, and that's the great thing about Ehang. That's the one thing that I got involved with, is like sometimes you see a lot of companies that Ehang doesn't have. This is why I don't ever want to make it a big position, because they don't have that much revenue at the moment, because they're waiting for a lot of regulations to get passed. And they don't have that much revenue. But if these regulations come in, who's going to be the company that capitalizes on it? It's going to be Ehang, because they've got the proven prototype with so many test flights at the moment. And that's what I really like about it. I'm getting the number one player in this area if this industry ends up blowing up in the next 2-3 years. And that's why it's like it's a spec stock that I buy and hold for the next 5 years and see where it goes from here. And that's what I really like about this company. I'm kind of putting a little bit of money in here and see what happens. It might not do anything, or we could be talking about a multi-billion company in the next few years, and that's why I bought this one. From my point of view, I started buying this company probably around about $70, and it had gone up on a bit of a good run, and I was like, I just want to buy some, and then if it carries on going crazy, I've at least got a little bit of a play in here, and we'll see where it goes. At the same time, I was like, it's probably overvalued, and that's what I think what the shorts were thinking at the same time when the short report is, watching the stock price go up and up and up, and it's like, this is the best time to do it because it is overvalued. This company was, we've seen it with many other companies, but they just don't have the elastic band come back on them. Is that they have no proven prototype or no proven like revenue. Like they don't really have anything coming into the company, but they're then trading at 20 billion valuations. And Ehang was starting to go down that path. I think at the time it was like a 6-7 billion company with not really much revenue, and it was probably overvalued. And they brought the short report out, and we had the stock come back to reality. And a while ago, I was posting on the Discord saying I won't buy any more of this company until it gets to $30 or $40. And a few people were like, it's not going to come back to that, Jacob. And I was like, you never know what happens, especially with a company with no revenue that's been on this good a run. And it's just that elastic band getting further and further away from reality. And then they bring the short report out, and then we kind of have the snapback. And you kind of get to that point where it comes back to $30, $40 where you said, oh, this is where I would like to buy, the stock again. And you're like, oh, and then you see the short report and like, do I want to do that? But it's one of those, you just got to, go through the information, what you got to, what you know about the company. And I spent a good, I think the short report when I kind of realised it came out, it was about 8 p.m. or something UK time. And then I think from about 9 p.m. to about 3 a.m. and then I got back up at like 7 a.m. to like 10 a.m. I was just reading more and more information about Ehang, trying to like, how much can I dismiss of this short report? And I went through the short report in like, not too many hours, but I was like, if I can dismiss 80% of this short report as complete lies, then how much credibility does it have? I looked at their track history and I was like, they don't have a great track history. I'm like, I can me in a room can dismiss 80% of the information here as complete lies. And I looked at Ehang and I was like, they are a company that, not like a Nikola, they haven't got, you always look at Nikola and you're like, I'm not sure on that. But with Ehang, you're like, you can see they've got a product. You can see they've got a product that works, and it's they can't lie about that. You've had so many officials that have gone in it in different countries. This is a legit product. I was like, you got a legit product with a short report where I can pick holes in it in a few hours, 80% of it, and I was like, this is definitely worth buying at these sort of prices. And like I said, I just kind of like, I ended up doubling my position, and then I increased it by 50% again. And I was like, buy it now, lock it away, see what happens in 5 years. It could be a massive company. And one thing that I think will help the company from this point of view is that I did really like how the management responded to it. The management response to the short report was fantastic. The amount of information they put out in there, how they dismissed every claim that was in there, how they're doing the Investors Day in the new factory in June when it kind of gets finished in the next few months. Hopefully this is kind of like a little bit of a kick to management to go like, they're already really good at putting press releases out, but they're always like, this is news that will really help the company, rather than news of like, oh, this is what we've just put in our factory today, or stuff like that. And I think it might help them from that point of view to not focus on putting press releases of things that will help them in the future, but things that are just going on right now. In the investor relations, putting photos in the Tesla do it all the time. Putting photos of this is our factory right now and the scale up of we have. These are all the unmanned drones that we've produced this month. Having like them photos of how successful the quarter's been will really help them. So I think that might give management a bit of a kick to kind of go, hey, this is what we need to do going forward. So I think it's good from that point of view, and I'm also really impressed with how management responded to it. And I think as well, I think that Ehang has come definitely kind of getting a bit known more in investors. More people are aware of this company. Sure, probably not the best way they found out about it, but more investors know about this company now, and if these guys can prove how well they are doing, then maybe it could turn around for them. But yeah, I'm not going to spend too long on it because I kind of did an hour video on it this week. But yeah, I'm kind of fully built on my Ehang position now. Could maybe buy a little bit more, but I don't like, it's a spec play. It's not a huge position in my portfolio, and I'm just kind of like locking it away for the next 5 years and see what you can do, kind of thing. So yeah, pretty happy with that one. But yeah, those are the 3 stocks I bought this week. Obviously, like I said, there's a few companies going into next week that obviously we've got earnings, but there's a few other companies that kind of got too interesting value, so I might see what happens there. If I do buy some, I'll probably let you know at the end of next week, but if you do want to know when I am actually buying them, The link to Patreon is in the description. But hope you enjoyed it. If you could, smash the like button. Let me know in the comment section what you bought this week. I don't always get back to the comments, but I do always read them, and I'm always interested to hear what you guys say and what stocks you bought this week as well. So yeah, let me know down there in the comment section. And hope you enjoyed the video, and I'll see you in the next one.